Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Markets have been volatile from the beginning of the year, and the situation is expected to remain the same in the near term. Investors continue to face anxiety in 2022 as rising interest rates, persistently high inflation, and fears of recession top their biggest concerns, and this has led the markets to drift lower this year. Indian markets posted their worst half-yearly performance in nearly 2 years, with the Sensex and Nifty 50 slipping 9% each. However, even in these volatile market conditions, several stocks have given fabulous returns. And interestingly, these are not penny stocks or fly-by-night companies, but rather medium and large-sized companies that have dodged the recent market sell-off. Hi, this is Yazad, and in today's video, let us look at 5 stocks that have grown in 2022 and given good returns this year. First on our list is Bharat Dynamics Limited, a PSU under the Ministry of Defence. The company has state-of-the-art facilities for manufacture and supply of guided missiles, underwater weapons, airborne products, and allied defence equipment for the Indian Armed Forces. With over 5 decades of missile and allied defence equipment manufacturing experience, the company is all set to benefit from the government's push for Atmanirbhar India, as this will help cut India's dependence on imports for military equipment, as most of the projects will go to domestic manufacturers. Bharat Dynamics is poised to enter new avenues of manufacturing, covering a wide range of weapon systems such as air-to-air missiles, air-to-surface missiles, air defense systems, underwater weapons, and mines. Recently, the company signed a contract worth 2,974 crore rupees with the Ministry of Defence. Bharat Dynamics recorded a turnover of 2,800 crore rupees for the financial year 2022 as against 1,914 crores in the previous year. Net profits also doubled from 257 crores in FY21 to 500 crores in FY 2022. Starting its dream run this year from 390 rupees, the stock is currently trading at close to 700 rupees, around 79% growth this year, even as the Sensex is down almost 10%. The stock hit its peak this year at 884 in April, before becoming a victim to the bloodbath the indexes across the world have experienced, but it has stabilized and continues to hover close to 700 rupees levels. The share price further got a boost after UAE firm Tawazun Economic Council exchanged a memorandum of understanding to explore new business opportunities in various areas of mutual interest. Under the MOU, the companies will explore the export possibility of the products to reach global demands. One of the fastest growing large cap stocks of 2022 is ADANI Green Energy, one of the largest renewable energy companies in India. The company's shares started off the year trading at around 1,350 levels, and by April, the stock went on to touch a high of 3,048 rupees. Since then, the stock has fallen sharply, but even then, as of today, the stock has given a return of 41% till date. Interestingly, the promoters have been steadily increasing their holding since June 2021. The holding has increased from 57.47% in June 2021 to 61.27% currently. In May, International Holding Company of Abu Dhabi completed its $2 billion investment in 3 ADANI companies: ADANI Green Energy, ADANI Transmission, and ADANI Enterprises. Now, of this, ADANI Green received around $500 million in the form of primary capital. This is expected to help the company deleverage its balance, lower its capital costs, and improve its credit rating. Moreover, the company has raised a green loan from 7 international banks to fast-track its hybrid solar and wind project in Rajasthan. While all of this bodes well for the company and shows an improvement in the company's overall performance, an increase in leverage and delay in completing projects can affect ADANI Green Energy's performance. In the financial year 2021, the company's debt-to-equity ratio stood at close to 8, and it is expected to remain high in the medium term as the company is funding its capex through debt. Third on our list is Adani Transmission, the power transmission and distribution company of the Adani Group. For the year ended March 2022, for the financial year ended March 2022, the company increased its transmission network to 18,795 circuit kilometers, a growth of 9% year on year, and its power transmission capacity increased by 29% due to the addition of new substations. Revenues zoomed by 690% in the fourth quarter as compared to the first quarter of FY 2022. The company's shares have given close to 45% return in 2022. The growth in the share price came on the back of the recent operationalization of new projects. While the company's operational performance has improved over the years, its long-term debt has grown at a CAGR of 10.6% in the last 3 years, mainly due to its expansion plans. Though the company said it would fund the capex through internal sources, it might depend on temporary arrangements such as unsecured loans, increasing its leverage. The debt of Adani Transmission stands at 29,815 crore rupees in the financial year ended March 2022. It is also exposed to forex risks due to high dollar-denominated debt. Moreover, the promoters have pledged 7% of their shares. Going forward, a strong revenue profile and growth of the transmission business will drive revenue and profit. However, this will be offset by an increase in interest payments. Owing to rising crude oil prices, refinery stock Chennai Petroleum Corporation or CPCL makes it on our list. The stock has given multibagger returns of over 160% in 2022 so far, even though it has fallen over 17% in the past week alone. CPCL, a subsidiary of the state-run Indian Oil Corporation, operates in the downstream petroleum sector to produce an array of value-added petroleum products. The rise in the Singapore gross refining margin to a record high of $25.2 a barrel boded well for Indian refiners, causing the recent surge in the stock. GRM is a common measure of the refinery margins. It is the amount that refiners earn from turning each barrel of crude oil into fuel products. Adding to the rally, the company posted strong Q4 results, recording a four-fold jump in its bottom line on the back of firm sales growth. What's more, ace investor Dolly Khanna bought 1 million shares of CPCL on April 28th via an open market transaction, adding fuel to the fire. And we do know what happens when a market guru loads up on a stock. Finally, on our list is Adani Total Gas Limited, yet another Adani company. Adani Total is a joint venture of billionaire Gautam Adani-run group's gas arm and Total of France. Adani Total's target is to open over 500 CNG stations by 2025 and over 2.5 million PNG connections by 2028. Adani Group's execution skills and Total's operational efficiencies is expected to help in a faster rollout of the network at an optimum cost, thereby improving profitability. Earlier this year, the company bagged 14 licenses to retail CNG to automobiles and pipe cooking gas to households in the latest city gas bidding round. The share price zoomed by over 1,000 rupees. That's a massive 64% in just 19 trading sessions between March to April this year. Since then, the stock has yo-yoed between levels of 2,000 and 2,700, but recently moved back higher and is currently trading close to 2,500 rupees per share. Even at the current levels, the stock is up by 42% since the beginning of the year. Adani Total Gas also recently entered the electric vehicle space by launching its first electric vehicle charging station in Ahmedabad. The company aims to expand its network by setting up 1,500 charging stations across the country and has kept an expansion plan ready to move beyond 1,500 stations based on demand. Besides this, the company, along with the Indian Oil Corporation, has announced a plan to set up compressed biogas plants in Uttar Pradesh to produce biogas from cattle dung and crop residue. Adani Total Gas has heavy expansion plans which can be supported through debt as the company has enough scope to raise funds through leverage. Though the funding is secured for these expansion plans, there is a huge execution risk. Any delay in the execution of the projects will attract penalties. Despite having a healthy sales mix from compressed and piped natural gas, it has only adequate gas tie-ups for the medium term. Adani Total's ability to secure long-term contracts for gas requirements will determine its future revenue. A market rally or a crash can happen due to multiple reasons. A major economic reform or a business's performance can take the stock price in either direction. Another major reason that contributes to a market rally or crash is panic. Panic buying or panic selling can affect the stock price in no time. No wonder stock markets are compared to roller coaster rides. While returns can look lucrative, markets are very volatile in the short term. One needs to have a very high risk appetite to digest such volatility. It's always better to check a company's fundamentals than to get attracted to the short-term price rallies. This way, one can minimize the risk of the investment portfolio. Remember, investing should make you money while you sleep and not become a reason for you to lose sleep. That's all we have this week. Thank you so much for watching. Happy investing and goodbye.